Good morning. It is already the end of March. On Monday, we have the USDA March acreage intentions report. Many people expect the corn acreage to be up. USDA said in February 3.4 million in their ag outlook. Many people think it will be up as much as 5 million acres. And of course, that will come some at the expense of soybean and wheat acres. Look at the changes we had this week. May corn down 11 cents, May soybeans opposite direction, up 14 cents. So obviously, some people are putting some bets down for the USDA report at 11 o'clock Monday morning. Chicago wheat, though, down hard, down 30 cents in Chicago May, down 24 in Minneapolis May. A lot of developments maybe that are causing that. Some rain forecast, increased rain forecast in winter wheat country, probably primary it, but we are having some impact on this Russian uh, U.S. negotiations over Ukraine. Ukraine is actually Russia and the United States appear to want peace. Ukraine appears to want war, even though they're losing the war. It is a very odd situation. Ukraine basically trying to sabotage that. So you see the crude oil going up $1.08 this week because it looks like that conflict is not going to end. Other thing that's really, really interesting, June gold went to new all-time 6,000-year highs again this week, up $66. Let's get into some of the details on these charts because we have some interesting developments. Of course, in corn, we ran up to new highs in the May contract just this spring in mid-February. That was actually fortunate because that set prices for December corn futures at 470 for new crop corn futures, basically about break even for U.S. producers when there's nothing else even close to that. Soybeans at least $1 or more away from break even, wheat 50 cents. So we're going to have corn acres switching to corn, and those crop insurance prices set in February almost determined that. Look at where we were in the month of February for May corn, and of course, Dees corn is following that. So we basically had the highest price of the year. Now we dropped very quickly into February, and now we tested that recent low in May corn. We almost are going from the high in corn in mid-February, maybe to the low here in April. And look at this as the first test of that support. Friday, we had an upside reversal in corn. Surprisingly, buying emerged here at this support level, which I guess you can expect. That's the lowest price we've been in a few months. But farmer selling, of course, is drying up. The basis is improving on corn. So our corn sales up here, I think we sold 40% of our old crop between 505 and 515. And the market, we sold another 30% of new crop, and we sold another 25% of old crop there. So we sold 100% of the corn crop here in the end of February and early March, and that's looking very good right now. But we are testing these lows. There obviously was buying on Friday, upside reversal, but corn's still lower for the week. I think we're just testing that low, and Monday we get that acreage report. Many people think we're going to see 5 million or more in the March intentions. I don't think so. I think it'll be an increase more than the 3.4 million they forecast in February. I'm guessing around 4 million increase, 4.5 million increase. But in the end, I think it'll be 5 because that February 470 December price is going to outcompete virtually any other crop farmers are, especially if we get an early planting season, we'll probably end up with more corn. So the corn charts look very negative now. Looks like corn is going to come down here and test these lows. And of course, the old crop corn that's unsold is where you're going to have problems. But I think that's going to be a genius position to be selling, locking futures here and even here and waiting for that basis to improve, because when we get down here on futures, they're not going to get any cash corn moving for the next few months. And I think by this summer, we're going to have some pretty good basis in corn, which will be surprising for many people. Soybeans, we hit this support level again this week, and the market actually rallied from there. So look at this support level, basically the lows other than this bear trap here. But of course, we have tariffs coming on this coming week, and it'll be interesting to see if soybeans can hold this support. but we might get a bullish report in the Monday acreage, more acres switching from soybeans to corn. And in the end, I think there will be more switching over to corn because the soybean price, what was it, 10.54 established in February, that's not going to be attractive to anybody. We also had 95% ECO now available, where you could lock in 95% of that price. I think corn futures in December are trading under 440. 95% of 470 is 447 already. We have a put option if you bought ECO. And I think 70 or 80% of the smart farmers bought that ECO 95%. So here we are, wheat, Chicago wheat challenging, making new lows this week. Obviously, they're talking about allowing grain to flow out of the Black Sea, at least some kind of peace or truce, that isn't working out very well, though both Ukraine and Russia agreed not to attack energy infrastructure, and Ukraine has been attacking it ever since they agreed. Ukraine is doing everything they can to sabotage this agreement. Zelensky actually said last week that Putin will be dead and the agreement will be over. Wow, that guy is probably the biggest obstacle. And Putin this week basically said, we need to have the UN come in and take over the country of Ukraine and reorganize it and organize elections, because with Zelensky in there, peace is not going to be possible. And Russia doesn't trust him anyway. So it is very, very interesting. I think that is sabotaging the peace agreement between Russia and the US. And quite honestly, most of Europe is doing their best to sabotage it too. Most of the EU countries, with the exception of Hungary and Slovakia. So here we have spring wheat making new lows as well. And obviously there are other situations impacting this. It's just very, very interesting. And in the wheat case, we had this rain, down here this coming week, the week's rain. There's some very good rain here in the east. That's going to actually delay corn and soybean planting, because you're looking at, 3-4 inches of rain in this area. So the south usually gets going here in early April. That probably ain't going to happen for a while. The east might be too wet. But actually, hard-red winter wheat country, this rain started creeping here into Nebraska, Kansas, and Oklahoma, and a lot of Texas. So it is interesting that has pressured the market somewhat. The 6 to 10 and 8 to 14 day forecast also shifted, much cooler and wetter coming up the next 2 weeks. So this area now is forecast to get some rain in the 8 to 14 day situation. So that obviously pressured the wheat market as well. Looking at some of these outside markets, I talked about crude oil. Crude oil went from nearly the year's high in mid-January when Trump was brought into office, because he wanted to negotiate peace with Russia. Crude oil dropped basically about $10, $8-9, well, full $10 back, right down to the yearly lows in 2 months. But in the past month, it's become obvious that Ukraine and the European Union are doing everything they can to sabotage that peace deal. And so obviously, crude oil bouncing up about $4 in the last 3 weeks or so, up another $1 this week. So that looks like it's going to continue. But here is the most interesting story, I think. How gold unilaterally is running. We were at $2,100 before the U.S. election. And since then, gold has run to new all-time highs over and over and over repeatedly. And all the other commodities were not doing that. And here, for 2 months, crude oil was dropping hard. The U.S. dollar was dropping hard. The grains are dropping hard versus every other commodity. The stock market is even dropping hard. But gold unilaterally is running to new highs. Actually, many people are talking about gold at double the old high of 2,100 before it stops. That's $4,200. And basically, you look at the pace we're going up, even since November, 28, 2,900, we're over 31 now on the June contract. What could possibly be propelling gold to new highs like this? Think about it. The United States has $36 trillion in debt. Interest rates have jumped from 2% to 6 or 7. And most of that debt is written on a 30-year deal to countries mostly that now don't like us because of our stupid foreign policy in Ukraine, where we basically provoked a war with Russia. United States pretty much fighting using Ukrainian soldiers, Russia, all of NATO, supporting it. Wow, a crazy, stupid policy Biden implemented. Or was he really even the president? The deep state basically ran the United States the last 4 years on autopilot. And you think about it, we ticked off all those countries, especially China, that's financing U.S. debt. U.S. debt could get very expensive. And just when they expire, we're going to go from 2%, which costs us $700 billion a year, to 6%, which is going to cost us $2.2 trillion a year. So $2 trillion is half of annual tax collections just to service the debt. United States is in deep trouble. Not only that, we have a $2 trillion deficit every year the last few years, and we still have it. 2 trillion more onto that 36 trillion in debt every year. So we've got a real problem. We have a president that wants to get spending under control. He implemented a new agency, DOGE, Department of Government Efficiency, and every liberal in the country and some Republicans, the entire media, is fighting him. He's trying to get the budget under control so United States doesn't go bankrupt. But no, everybody wants to complain about, you can't cut my Medicare, Social Security, you can't cut USAID, no matter how incompetent they are. You can't cut the Health and Human Services, even though they totally screwed up during COVID. Government is no good at almost anything. You could do it privately for half the price, but gosh, we can't cut government. Somebody might be offended. So look at the gold market. Think about the United States and the impending doom coming there, and gold is rocketing. Not only that, in the Ukraine war, we ticked off half the world who's looking for an alternative to trading the US dollar on world trade terms. How about gold? Wow. And gold rallies to new all-time highs, unilaterally, without any support anywhere else in the world. All the smart money is long gold. You know the old saying, close your eyes and buy new highs. And that has certainly been the case in gold. Wow. There's a lot going on in the world, and I wonder, with tariffs, the gold market, the US debt, and by gosh, a president can't even get spending under control with the Republican House and with the Republican Senate, because the U.S. judicial system shuts him down every time he tries to save money, even on fraud, waste, and abuse. Wow. You think about what the rest of the world is looking at happening in the United States. Wow. What an impending disaster waiting to come if we do not do something about our spending and debt. So look at the gold rally, start thinking about these. In the big picture, I wonder if that USDA report Monday morning on acres is going to be traded for 2 or 3 days, and it won't matter, because a few days later we have number one issue, trade wars in the United States, pushing grains down until those trade wars are over. After that, you can get very bullish grains, but while we have those trade wars pending with Mexico, China, Canada, China our biggest customer, Mexico right up there, top 3. We've got problems there on the grain side. Second biggest issue, probably the Ukraine war, and what a disaster that was created. And can people look sensibly at a disaster and say, boy, that was a stupid thing to do? No, we can't do that, especially Europe and Ukraine, who's lost 1 million people already. Third biggest issue probably is the United States debt and the catastrophe that's going on in our political system. So the fourth biggest issue is actually the fundamentals of grain. And therefore, the Monday USDA acreage report might be a minor thing, even though we might be shifting 5% of our acreage, 5% more acres into corn this year, which I think is going to happen. But what an interesting situation developed. Who would have thunk it? But here we are. Obviously, this whole scenario is playing out right before our eyes. So hard to get bullish grains as long as we have these trade war threats out there. Had an upside reversal in corn Friday, some potential positive things there. Will there be any follow through, and will we hold that shelf of support in soybeans? Some interesting things. It'll be fun to see what the market tells us next week. Hope you have a great weekend and good marketing.